So if you want to watch this video, that's great, but it's kind of clickbait video. Just heads up. The title is gonna be clickbait, and the picture is gonna be clickbait. But it's all about day trading, and yep. So let's begin. So the downside to Joro swaps and TD Ameritrade. Sorry if I butchered that. Eliminate trading fees. I think this is going to create a lot of day traders, and I just want to warn you guys that day trading is not a good idea. There's a lot of emotional, and there's ways for companies like this to make money regardless of the fees, but it's really nice to have no fees for trading. And I think that down the road, if this continues on, these two companies will get a lot of business from people who have money, who on the stock market. They're gonna be like, why am I paying my bank $5 or $9 to go and trade a stock when I can just go to these guys, which are actual banks, and use them to trade stocks. And I think in the future, I think BMO and Canadian companies are going to have to be forced to do this too, and they make a lot of money off of stock trades, and they're gonna lose a lot of money. And this is I think this is going to be a negative impact on all bank stocks moving forward. If bank stocks don't announce competition, like lowering their prices to free, I think they're going to be losing customers. And I think that I'm very bearish on bank stocks right now. I think that bank stocks are going to be announcing no fee trades so they don't lose their customers, they don't lose their clients. Because honestly, I'm with BMO, but I can go with TD. TD is offering me free trades. I can switch my money over to TD, but then I guess I would have to be able to, only trade US stocks, and I couldn't trade Canadian stocks. That is the biggest problem, because I can go with Thinkorswim in Canada because my friend has done it and he's shown me how to do it, and I could potentially do it too. So, I'm going to go talk to my bank and be like, lower my fees some more, because these guys are offering free services. So, I think that's going to put pressures on the bank moving forward. I think in the next 12 months, all the banks are going to convert to eliminating trading fees. I think that's going to be the trend. It's going to increase the amount of investors, but again, I honestly don't believe investors should be going into the market right now. I think they should stay away from the markets, because I think that we could have a stock market crash in the future, and this could cause a lot of people to be butthurt if they get in, because they think, great time to be investing because trading fees are gone. But I honestly think people should be really careful about the stock market right now, and I think that in 2020 we could have a stock market crash. So that's my thinking. I don't know if that'll actually happen, but so moving forward, TD Ameritrade, they just plummet 30% after that announcement. It could be an opportunity right now, but again, I don't trust it. It's back to like the 2016 levels. It could go down even further. Who knows? Depending on how much this will impact their business. But it's great for people who have Thinkorswim accounts and are day trading. Like what is his name? Ricky, he day trades with Thinkorswim. Having elimination of trading fee would probably benefit him. Charles Schwab did the same thing and had a crash of about 16%. I think that moving forward, there's gonna be a lot of banks that are gonna announce it. Now I'm gonna talk about Graham Stephan. This is the clickbait video, how Graham Stephan loves day trading. So anyways, let's begin.
What's up, you guys? It's Graham here. So we're going to have a serious sit down today and have the investing talk, because I came across some very bad news today, and it's a very scary statistic. That is because, according to the stock trading platform eToro, they found that a whopping 80% of day traders lose money over the course of a year, with the median loss being 36.3%. That's right, 36.3%. That's like you telling me you want to go day trade stocks, and I'm like, well, okay, that sounds great. Let me just take 36.3% of your money. There we go. Okay, cool. I'll see you next year. Which, oddly enough, is also what the IRS does as well. Illuminati confirmed. But seriously though, the fact that 80% of day traders have a median loss of 36.3% is absolutely unacceptable and needs to be stopped. Not to mention that 75% of day traders end up quitting within just 2 years. So let's go over why investors are losing so much money, how you could prevent this from happening, and how you can actually end up making money in the long term by smashing the like button if you haven't done so already. No, I'm actually being serious. A study by MarketWatch found that over 80% of subscribers do not hit the like button. So don't just be a statistic, make sure to hit the like button for the YouTube algorithm. Thank you. Now, for those who aren't aware, day trading is a style of investing in which you buy and sell a stock or any other investment within a short period of time, meaning you're going to be holding onto a stock for like a day or two, or sometimes even minutes or hours before you sell it. This type of investing relies on daily momentum and price fluctuations in the market to make quick short-term profits, or 80% of the time you're actually just going to be losing money. And I am no exception to this experience either, because in high school I was lured into the appeal of day trading penny stocks from an ad I saw from Timothy Sykes, who turned $12,000 into a $5 million fortune using these exact strategies, which you can learn, by the way, for as little as $149.95 a month. Needless to say, my high school investing experience did not end up well. I had some initial success getting very lucky on stocks I knew nothing about, but just saw people recommending them online. And then I just had a series of bad trades, one after another, where pretty soon I lost most of my money. And that was my first wake-up call to
day trading back when he was in high school. Moving forward,
the experience of day trading really stocks. And it looks as though the losses from day trading have increased over the last 20 years. In 1999, the North American Securities Association In 1999, the North American Securities Administration Association. Why do they gotta make this so hard? In 1999, the North American Securities Administration Association, not to be confused, by the way, with NASA, found that 70% of traders lost money, with only 12% of them actually making a profit. And now those numbers have only gotten worse. It's through the increase of free stock trading apps and programs and the accessibility of information that more people have wanted to give this investment strategy a try and also fail. So why do so many people just end up losing money? Now, first, a huge reason for such large losses is really due to a lack of diversification. Like, just consider this. A finance professor from Arizona State University analyzed the performance of over 26,000 publicly traded stocks since 1926. That was a lot to say. But what he found from doing this was absolutely incredible. Even for me, I was stunned. He found that the average stock only traded for 7 years and then lost money, including reinvesting the dividends. And if you thought that was bad, it gets worse. He found that the most common return of the average stock over the last 100 years was a loss of 100%. And only 48% of stocks out there delivered any type of positive return whatsoever. And from those 26,000 stocks that were analyzed, only 1,000 of them were responsible for the stock market profit since 1926. And from those 1,000 stocks, 86 of them were responsible for half the profit. So really, from this data, only 4% of stocks actually make more money than the average return of a 1-month treasury bill. And the other 96% of profitable stocks really only kept pace with inflation. Now keep in mind though, that data analyzed all stocks over the last nearly 100 years, including a lot of very scammy penny stocks out there. So when you instead just look at the largest publicly traded stocks out there, it's found that 80% of them actually do make money over rolling 10 10-year periods. Yet still, 56% of them performed worse than the overall market index. So given that, over the long term of day trading, your likelihood of losing money is incredibly high without proper diversification and money, and also a little bit of luck in picking the winning stocks. Now secondly, given that information, it was found that most investors are overconfident about their investing ability, leading them to trade more aggressively and then lose more money. A study conducted in 2017 found that when many stock traders were
I had a problem with that. I became overconfident. I made a lot of money on Aurora, and I just became overconfident, which was what caused me to lose so much money in the markets in the first place. But if I was more careful, I could have, I could have did very well. But I could have, been patient and waited for the right moment. And right now is the right moment when everyone's panicking and fear is everywhere. I think it's the right moment, but at the same time, there is the risk of a stock market crash that could happen, that could, cause these stocks to go down even further. But I don't know. At the end of the day, we'll see. But I honestly don't think that will happen. I think when the United States become legal, I think these stocks will go, up to 300%. And if they do crash and go down even further, we could be looking at 1,000% return potentially. So yeah, anyways, let's begin and let's hear what he has to say.
Successful, they disproportionately attributed their success to their own ability rather than by luck, which ultimately leads them to making riskier investments and then further leading to our statistic. Not only that, but day traders are more likely to downplay their losses and mentally exaggerate their wins, leading them to want to keep going. And overconfidence like this does a few things. Number one, it makes you more likely to jump into a trade without doing enough research. Secondly, you're more likely to stay in a trade for too long because you don't want to say to yourself that maybe you were wrong. A lot of times when it comes to this, your ego is your worst enemy, and admitting to yourself that maybe you were wrong is a very hard pill to swallow. And third, overconfidence might also mean that you're more likely to buy into a dropping stock and just continually pour money into something because you believe it's eventually just gotta go back up. So if you are gonna be trading stocks, just never confuse luck with ability and do not overestimate your own ability to pick winning trades. Third, your own emotion while day trading will likely become the hardest barrier to overcome. And anytime we're investing, chances are we have four emotions that come to mind, and that would be hope, greed, fear, and regret. Needless to say, oftentimes those four emotions will overpower any amount of logic out there when it comes to the thrills of investing and making money. Like at first you're hopeful you'll make money because you see all the potential out there. You'll hear about investors out there making millions of dollars by investing in no-name penny stocks. You also hear and read about all these other people making these winning trades, and you think to yourself, well, if all of these other people are doing it and I see that it's possible, what's to stop me from being able to do this too? And that is when the greed starts to come in.
Let's just go a little bit more in this risky investment over here. If it goes up in value, then how much more can it go up in value? This is just the beginning. If I just hold on to it a little bit longer, I can end up making a ton of money.
And then you're hit with fear. It's the fear of missing out on more profit if you just held on to it a little bit longer than you probably should. It's the fear of losing money that causes you to sell the stock as soon as it goes down in value, even though it might just end up going up right afterwards. And the fear of loss is a much more powerful motivator than the potential for gain. And then finally, we have regret. What if I invested in this other stock as well? What if I regret not making all of this money over here because I didn't invest? What if I stayed in a little bit longer? Am I gonna regret selling or regret buying? And all of those four emotions are likely going to inhibit your day trading profitability unless you're a robot. In which case, day trade away. Now fourth, unless you're trading with a lot of money,
that he mentioned, I experienced them all. I had greed, I had fear, I had hope, I had regret, all those emotions I've experienced in the past 12 months. It's amazing, what he said. It's really true. But anyways, let's move forward with the rest of his video.
You're likely going to want to make riskier, more profit-driven decisions to justify the time you spend investing. Like, just consider this. Imagine if you're investing with $5,000 and in the first year, you make a 30% return, day trading for 3 days a week for a few hours each of those days. You know, that's only a $1,500 profit at the end of the year. Broken down per hour, those profits that you made, even though it's a 30% return, is likely less than you would have made had you just worked a minimum wage job instead. However, if you're trading with $200,000, a 30% return is equivalent to $60,000, enough to cover someone's full-time salary. That might cause people with less money to invest to go in pursuit of 1,000% profits versus 30% profits, therefore also increasing the likelihood that they will lose money. And anytime people are trading with less money, they generally will have less room for error. One or two really bad losing stocks could easily wipe out all of their money, versus someone trading with much more who could afford to weather more losses or diversify into multiple stocks. And fifth, the main reason why I believe people are likely to lose money day trading is because they believe it's just a quick, easy way to make money from their computer or phone with very little work. These are the people who don't have a plan, they don't have any idea when they want to enter or exit a stock, they don't do any of their own research. These are the people who just want to get rich quick, so all they will do is jump into a trade on a whim because someone recommended it on Reddit's Wall Street bets. And then if they get lucky, they'll overestimate their ability to pick winning stocks, which will lead them to pick further, riskier investment options until eventually they lose. It's almost like a gambler getting lucky on roulette who believes that they have a natural ability to go and pick the winning numbers. And you might end up getting lucky many times in a row, but eventually the house is going to win. The same also applies to stocks if you view it as a get-rich-quick scheme and just throwing money at whatever people recommend. And really, at the end of the day, I don't mean for this video to discourage anyone from wanting to day trade stocks. But I do want it to serve as a reminder that this type of investing style is inherently risky, and when you understand why so many people fail, you could better adapt your investing style to one that is sustainable long-term and also one that is profitable. Because not only are you competing with your own emotion anytime you're day trading, but also with hedge funds, institutional investors, high-frequency trading algorithms, and everything else that goes into these trades. So it's so important to go into it with a plan, with research, and with the understanding that you are likely to lose money. It's also for these exact reasons why I myself have never had an interest in day trading stocks and why I've always stayed away from it. I understand my own limits, I understand the amount of work it takes to do this successfully, and I would rather just invest in a broad index fund and ride the overall market rather than try to beat it. Not to mention that long-term investing is way less risky, it has much better tax benefits, and you're way more likely to make money over the next several years than you are over the next several hours or days. So with that said, you guys, thank you so much for watching.
Tax benefit, it is true. If you are day trading, so you will get taxed more from the government, because when you actually invest, 50% of the profit you make is tax free, and then the other 50% would be 30% tax on it. So if you made $100,000, you would get, $50,000 is tax free. The other 50 would get 30% on it, which would be equivalent to around $15,000. So you would get taxed $15,000 on $100,000 profit. But if you were to make $100,000 day trading, you would probably get taxed $30,000 instead of $15,000. So day trading doesn't, you do get taxed more, and it's, it's harder. It's way harder than long-term investing. That's my opinion, and I honestly believe long-term investing makes you more money at the end of the day, but that's just my opinion. Anyways, thanks for watching, guys. I hope you enjoyed this content. Give me a thumbs up, it helps my channel grow. Subscribe for future updates, and have a great day. Bye.